Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
If you go back and you look at the 2017 bull market or the 2021 bull market, historically we see anywhere between 4 to 7 drawdowns of 30% or more. And so really what we're seeing is just what has always happened. Bitcoin is a volatile asset. That's what people are buying. It's buying volatility. So if you want Bitcoin to go up, you've got to be okay with it going down sometimes. And these kind of cooling off periods or these consolidations are very natural.
Keep in mind, the damage has been done. The damage of these tariffs has already been done. They've seeded tremendous uncertainty. They've created a sense that the United States is no longer a trusted trade partner. And if I'm the UK Prime Minister flying back home, my first thought is it even worth the candle? What is a US trade deal if the obligations can so readily be thrown out the window?
We're generally very excited about everything that's coming up. In particular, we have historically we've had the free version of Duolingo and also the premium version called Super Duolingo. Over the last, call it, year and a half, we've started adding a new higher tier called Duolingo Max, which is getting really good adoption. It's about twice the price of Super Duolingo. And what it has is it has really good AI features that help people practice conversation. And we're seeing really good adoption on that.
We got 1 hour to go until the market close, and we have been seeing stocks bounce around quite a bit over the course of the session. We had PCE this morning. They came in largely in line with estimates, not showing anything alarming on the inflation front. So let's look at the action here. The Dow briefly dipping into the red a couple times here, sort of mid-afternoon. Now it's up by about 0.5%, a little more than 200 points. The S&P 500 also up 0.5%, and the Nasdaq about 0.5%. So we're confronted with, at least for now, a different feeling than we've been seeing, a different movement than we've been seeing recently, heading into a weekend, this line going up instead of going down. But there's still time. Yeah, PCE was interesting. Of course, the Fed's preferred inflation gauge, because it did come in largely as expected, Julie. And it was interesting to read some of the economists' reaction in response to that. Some of them telling their clients, off that data point, off that print, you could see where the Fed could say, hey, further progress has been made. Maybe they say you could even envision a cut by mid-year. But the issue, of course, is you have a lot of other balls in the air, like tariffs, which, of course, complicate that picture. Yes, you do have tariffs and geopolitical risk, which was highlighted today, which we'll talk about in a moment. I've been watching the 10-year yield as well, because it continues to move down pretty dramatically here, 4.23%. Now, as we talked about a little bit yesterday, there are some in the administration who now are saying they're using this as a report card rather than stocks as a report card, and that lower is better. Well, if lower is better because of growth concerns, it's not necessarily better, but we're going to dig into that throughout the show as we see it here. I'm just looking at the 1-year chart here to show us that we're at the lowest since, I'll call it mid-December there. Yeah, you did mention geopolitics. I think we got to talk about that because obviously you saw Trump, Vance, Ukraine, Zelenskyy, and that meeting just implodes. I mean, we have really never seen something like that on camera in the Oval Office before, never, right? And so you could argue maybe some of that was telegraphed by some of the rhetoric heading into that, but obviously a shouting match, tempers flare, questions about what that relationship looks like ahead, if there is a relationship. And for a market that already felt fragile, now you raise these new questions about geopolitical concerns. Yes, absolutely. If you looked at the U.S. dollar here, a little bit of strengthening. This is the 1-year chart, but let's look at the day here. A little bit of strengthening. We saw some emerging market assets showing some trepidation during that meeting. But let's get the details on it, because I know our Ben Warshko's been watching it closely. Indeed. President Donald Trump and Ukraine President Zelenskyy met in the Oval Office today, and things did not go as planned.
You're right now not in a very good position. You've allowed yourself to be in a very bad position, and he happens to be right about it. From the very beginning of the war. You're not in a good position. You don't have the cards right now. With us, you start having cards. But right now, you don't. You're playing cards. You're playing cards. You're gambling with the lives of millions of people. You're gambling with World War III. You're gambling with World War III. And what you're doing is very disrespectful to the country, this country. For more, let's welcome in now Yahoo Finance's Ben Warshko. Ben, give us your reaction and response to that.
For sure, yeah. That clip kind of really tells you it all. But it was an incredible moment in the office that I think is definitely haven't been seen between a president and a sort of an ally in the Oval Office like that. What's also interesting about it is that clip came at the end of a 50-minute event that was friendly, largely, for 40 minutes. It was the last 10 minutes where things really went off the rails there, and it turned acrimonious after both Trump and Vice President J.D. Vance called Zelenskyy disrespectful and not kind of thankful enough for U.S. aid over the years. At another point during the back and forth, there was a line that Trump said, it's going to be very hard to do business like this. And I think that points to kind of the economic bottom line here, which is that this whole event, this whole visit today was to sign an economic deal that is now on the ice, for a time being. This was about rare earth minerals. It was kind of an agreement between them that would establish a fund that Ukraine would pay into to try to kind of tighten economic ties between the U.S. and Ukraine as part of the larger hope for peace negotiations. It's all on ice right now. That Zelenskyy left the White House soon after that. The deal has not been signed, I'm told, and it's very unclear what's going to happen to that. One of Ukraine's closest allies in the Republican Party, Lindsey Graham, was immediately out saying he doesn't think that America can do business with Zelenskyy. That's how kind of dramatic they're taking this. It's all up in the air, both the peace deal, the larger peace deal, as well as this economic deal, for certain.
Well, and of course, the whole paradigm of America's role as global peacemaker, as moral authority in the across the globe, is now changed, right? That it's more transactional, as we have talked about before with Trump in the White House. Ben, can you talk to us a little bit more about that turning point? Because for those of us who weren't watching the whole press conference, and as you said, there was 40 minutes of, friendliness there. What made, what sort of turned it sour? What made Trump and Vance start talking about, Zelenskyy allegedly being unthankful? What do you think happened there?
Yeah, I think it was a sort of build-up over time. It was the first 40 minutes were friendlier, but not friendly, I'd say. Gotcha. What it points to me is the kind of limits of economic diplomacy you hear. Coming into today, the idea here was that by finding their way to this minerals deal, they could find their way to a larger deal because of how positive Trump talked about this. If you'd listened to Trump all week, this was a deal that there's some skepticism of this, but this was going to remake the whole Ukraine, be kind of a whole economic development model for the whole country that the U.S. would be closely involved in, and he was very invested in that, and he was friendly in that things. Where it changed was kind of these personal issues, where I think he's clearly unhappy with Zelenskyy. He doesn't like Zelenskyy very much. It's sort of evident from the video. And these sort of respect issues where Zelensky's not sort of solicited enough of him is what turned it against him. But it shows that sort of economic diplomacy only gets you so far when there's this kind of bad blood between these two leaders that's gone back to President Trump's first term.
Right, exactly. And Trump, during that presser, also talking about how Putin had sort of stood by him as there were allegations about Trump's connections with Russia in his first term. Ben, thank you very much. Appreciate your time on this. For more on the latest, let's welcome in Nancy Tengler, Laffer Tengler Investment CEO and CIO. And Nancy, obviously this is a very headline-sensitive market, right? And we haven't seen necessarily a lot of geopolitical reaction to various things, ex-tariffs. But the market did seem to take a bit of a hit as this press conference was happening. And I'm just curious to get your take and how you're thinking about the global stability, I guess, as you look at what's unfolded today.
Well, thanks for having me, Julie. I think a couple of things. I mean, the market is now rallying pretty hard into the close. I don't know what that means. I think one of the things that the market was reacting to was the Atlanta Fed downgrading GDP for Q1 to a negative 1.5%. When you dig into why that is, I think it has a lot to do with the tariffs and the uncertainty around that. And so what we're seeing is people, accelerating imports to the U.S. accelerating imports and exports declining somewhat. But the geopolitical part, I think will play out. I've been watching Twitter since President Zelenskyy was asked to leave the White House. And I don't know if this is true. I haven't had a chance to check it, but somebody in Ukraine in the legislature is calling for impeachment. So I do think that we will see a resolution, and it'll probably happen fairly quickly. I mean, I'm still recovering from that reality show. I don't know about you, but the whole thing made me incredibly uncomfortable, but point well made and taken. And so we'll see what happens.
It's interesting, Nancy, just as someone who's watched the markets for a long time, I'm just curious, given the range of issues right now, you have these growth worries, Nancy, that seem to be bubbling up. We've got a trade war. We seem to have these new questions about geopolitical concerns. How much confidence do you really have, bottom line, in the near-term outlook for the market?
Well, Josh, I think the market is going to continue to be choppy. Our expectation was the first half was going to be volatile. And then we would, as we got clarity around the tax bill, which apparently has passed the House at least, deregulation, where we are going with the tariffs, that we would then, have the decks cleared for the headline risk, because earnings have been pretty decent. Guidance has been pretty decent. And my partner, Arthur Laffer Jr., actually believes that if we do go to reciprocal tariffs, that we will, that those will be deflationary instead of inflationary. So it is the uncertainty that is driving this volatility. And in the short term, it's always the algorithms and the hedge funds. Managers like me, I mean, we were adding to some of the tech names yesterday, and we'll probably be adding a little bit more to those names next week. We added to some of the infrastructure names, particularly around the electrical grid a few weeks back. So we're just going to continue to use volatility as our friend.
Nancy, I know that was Art, not you, who said that, but can you explain that to us? How are reciprocal tariffs deflationary?
Well, so think about our tariffs. Think about how our products are tariffed in other countries. If those tariffs were brought down, and then we brought ours down to that level instead of 25 to 30%, which are the numbers that are being bandied around, that would actually lower prices globally and also in the U.S. Now, we'll see. I think there's going to be a lot more jawboning around this topic, but I think companies have pulled forward a lot of their orders. We saw the ISM manufacturing numbers, which were very good for January. Expansionary employment rose, was also expansionary, and new orders rose. So if we are getting reshoring and onshoring, all this stuff kind of mitigates. If we get tax cuts, lower energy prices, it becomes it's a very complicated game at the moment. We saw that with the economic numbers. We had wholesale inventories increasing, retail inventories declining, personal income going up 0.9% versus expectations of 0.5%, but spending going down, and particularly real spending. So savings went up. So it takes time. You got to look at the trends because these numbers get revised so dramatically.
Nancy, I want to get your thoughts on some specific names. This week in particular, NVIDIA, Nancy, they report, I think the street, by and large, financial analysts thought the report was solid, thought the guidance was fine, but you saw that name get hit. I'm curious, Nancy, what you made of that report and that reaction.
I thought the numbers were great. I mean, and if you look at fiscal year expected growth and the guidance we saw, the stock or the company will generate over 50% in earnings growth. It's obviously decelerating, but there's also a huge backlog. And if you look at it on a multiple basis, it's trading at 23 to 26 times, depending on what time period you look at. And that's a PEG ratio of 0.5 times. And so that's pretty compelling for a company that's growing that pace. We added to it recently. We're going to probably add some more. I think this is the winning name. We exited AMD just the second. We thought that was going to be a compelling name just from the table scraps, but I think they've got some work to do on the product offering. And we still own Broadcom, and we've shifted our focus to the software names in terms of increasing our allocation because we think the inferencing aspect is going to be good for many of the software names.
Nancy, this also sort of speaks to the debate that seems to be playing out among some market participants right now about whether the pullback that we've seen recently is a momentum unwind or an actual sort of economic growth scare. And I'm curious how you have read it.
Yeah, I think it's a momentum unwind. I mean, go back to, I think it was the first quarter of 2022 when we got the negative, the 2 quarters in the first and second quarter of negative growth, and it turns out we didn't get a recession. I don't see a recession, at least if you're listening to the companies. And I do see increased use cases for AI, which is bolstering margins, earnings growth, revenue growth, productivity. So the monetization part is a little bit slower than expected. We heard that from Amazon, partly because they're supply constrained in terms of chips. So I think once we get through this Blackwell backlog and we start to see the companies really expand efficiency of their models, I think that is going to trump all of the other noise. And they've been selling off these stocks since DeepSeek, and I think there are a lot of questions around DeepSeek. And is it as good a model as we were told? And did they really produce it for $5.6 million? I think not.
Right. Right. Yes, definitely. There's been a lot of skepticism around that indeed. Nancy, thank you. Good to see you.
Thanks for having me.
We're just getting started here on Market Domination. Coming up, NVIDIA shares making a slight comeback today. We'll hear from an analyst on the other side to discuss what's next for the chip maker and the chip market following its latest report. Also, crypto concerns continuing, the price of Bitcoin remaining below $85,000. We'll send you out to the Bitcoin Investor Conference later in the hour to get a pulse on that industry. Stick around, much more Market Domination coming up.
NVIDIA reporting another earnings beat on the top and bottom lines this week, but now the attention is turning to tariffs as President Trump says he's imposing an additional 10% tariff on China next week. For more, we're bringing in Patrick Moorhead, founder, CEO, and chief analyst at More Insights and Strategy. Patrick, always great to see you. So let's talk about President Trump. He likes tariffs. He believes in tariffs, Patrick, as a policy tool. I'm interested to get your thoughts about how tech investors specifically should be thinking about that dynamic. I asked Patrick because I know that's a topic you've been thinking about.
Sure. So first of all, everybody needs to realize that Trump uses tariffs as a negotiation tactic. And he also wants to deliver on the promises that he made when he was running for president during the election. There's also some hysteresis going as well, where he did cut some deals in his first term that really didn't pan out, like China. So there's some memory there. It's very hard for the investor to play this chess game because the volatility is so high between no tariffs and 100%. I think he's just looking for the best deal. I think historically, what Trump has threatened versus what has happened is in the middle. And I know that's not very satisfying, but it is what it is. So if you're putting together your spreadsheets on impact, what I have seen, though, Josh, is some incredible reactions in the supply chain. Companies like Dell, companies like Cisco, and the hyperscalers moving the different chess pieces around. But the one chess piece they cannot move is Taiwan, where most of the semiconductors are built, namely NVIDIA, AMD, a lot of Intel, pretty much all of Qualcomm and Apple.
And there's no plan B for that, right, Patrick? In other words, and to be fair, there's no development on that front right now in terms of China's relationship with Taiwan, in terms of U.S. relationship with Taiwan, and kind of its support for its traditional ally. But there, we talk a lot about supply chains for different products, and that there is a lot of diversification, right? Apparel manufacturers moving stuff to Vietnam or what have you. That hasn't, to be clear, that hasn't really happened with the chip industry, right?
In mass, it has not. TSMC did set up shop in Arizona. You have Samsung, who is building a giant facility here in my backyard in Austin, Texas. But these things take time. I could see a negotiated settlement where companies like TSMC agree to increase investment substantially in the United States without CHIPS Act money. albeit it takes 3 to 4 years from the shovel in or the design to pumping a chip out to get them to have the Trump administration not go through with those tariffs. So it's kind of a time-related element.
Patrick, obviously we all know how much tech is assembled in China. Outside China, you look at these alternative manufacturing locations, you think of India and Vietnam and Malaysia. I'm just curious to get your thoughts, Patrick. What are sort of the advantages but also the challenges of those places?
Yeah, so when the pandemic hit, there were a lot of companies who got a lot more precise about their supply chains. We saw a tremendous amount of companies that used to do final assembly in China move those operations to Mexico, and all those ODMs like Foxconn added new facilities there. Vietnam, Malaysia, Indonesia, all are growth areas, but like we saw with China 20 years ago, there's a learning curve. There's a supply chain curve. And, listen, when I was setting up factories 30 years ago with the Taiwanese to go through China, there were places that didn't have electricity, didn't have paved roads, and those things all need to come together. I think the wild card here is India, right? India is growing to be the next potential China, and you see a lot of companies diversifying their supply chains, but nobody is unhooked from China, right? Let's say they move 10, 20, 30% of it there. It's just very difficult. Even Mexico to the US, right? The average electronics worker gets paid around between $4 and $5 in Mexico compared to an average of about $20 here in the United States. So you're going to pay somewhere, and where you move those flexible supply chains, I think, will be dependent on what the tariffs versus the costs are.
As you say, this is all pretty long term. Let's talk a little bit shorter term. We got NVIDIA this week. We're getting Broadcom earnings next week. And the reaction in NVIDIA was obviously quite interesting, given that there was nothing sort of intrinsically in the numbers that should have triggered the reaction that it did. So does that tell us anything about what to expect, not just from Broadcom's numbers, but sort of from the reaction also?
Yeah, and this might sound a little jaded, but in this area, a meet is a miss, right? NVIDIA had a triple beat, which it looks like people kind of viewed it as a meet. People are looking for a reason to get out of these types of tech stocks versus stay in. Part of that is the giant run up. But here's the thing. Demand should not be in question for Blackwell. Mag 7 CapEx of $325 billion remains. I think Blackwell is sold out. NVIDIA is indicating it is. TSMC says it's sold out for calendar 2025. And then the only question that's coming into play here is if it can deliver as many as it needs, if the tariffs will impact it, which you and I talked about already, and how long the run can go on. Listen, it's hard to make a confident case beyond calendar 25 that the rate of growth continues. We've already seen a expected deceleration in the growth rate.
Final question, Patrick. Let's spin ahead. Broadcom reporting earnings next week. I'm curious to get your take. What do you think we're going to hear from Hock Tan's company?
I think we're going to see similar growth rates in terms of acceleration versus NVIDIA. And the reason is because they have this accelerator business that they keep adding customers to. That's a play for them, but also the networking that goes along with this. While NVIDIA does have its own networking solutions, the primary breadwinner of all of this GPU goodness is Broadcom. So as NVIDIA grows, so does Broadcom. And let me be very specific. It won't be the exact percentage growth rate, but an acceleration of what Broadcom has been doing in the past.
Patrick, always great to see you. Always great to have you on the show. Thanks for joining us.
Thank you. Have me on.
Stick around, much more market domination still to come. Economic negotiation between President Zelenskyy devolving into a contentious conversation earlier today. Let's go now to Yahoo Finance executive editor Brian Sozzi live at Bitcoin's investor conference with Skybridge founder Anthony Scaramucci. Brian.
All right, thanks so much, Josh and Julie. Appreciate it very much. Yeah, so this room is a buzz of all things Bitcoin, but Anthony, first of all, good to see you.
Good to see you.
Appreciate you coming on, man.
It's less cold here than
less
it was
cold
in
than
Davos.
World Economic Forum, yes. You had to have seen the exchange in the Oval Office between Zelenskyy, President Trump, and J.D. Vance. Your thought on that?
Well, listen, I see it very differently than Donald Trump and J.D. Vance. The Russians were the aggressors. The Ukrainians had a democratically elected leader that repelled them and did the bidding of Western Europe and the free world by repelling a dictator from invading a sovereign nation. And so it felt like a setup to me. It felt like they brought him in to rough him up like that, I guess to humiliate him and get him to resign because he's a very strong leader. The expectation was 3 years ago that he was going to leave. Putin was going to take Kiev in weeks, and they've been fighting it out for 3 years. And so, I applaud Zelenskyy, President Zelenskyy, and I just think it's a shame that the United States is going in this direction. So I'm not a fan of what happened, and but I understand what they did to him. It was a propaganda setup, frankly.
You've worked with this president. You've been this close to him. What is he thinking in terms of why is he warming up to Putin?
None of us could figure that out. Whether it was me, McMaster, John Kelly, none of us could figure it out. And I'm not saying that President Trump is an agent of Vladimir Putin. None of us say that. But if he was, you would go down the list of what he is doing and you would do those things. You would go after the Canadians, our longstanding allies. You would attack the Mexicans. You would say that Panama needs to give back the canal. You're going to take Greenland. What he's doing is he's trying to set this up so that there's a multipolar world. Maybe there's an American pole to the world and a Russian pole to the world and perhaps a Chinese pole to the world. And that's sort of a change in direction from the free world protecting itself and drawing multilateral alliances and trade agreements among themselves to make themselves safe. And what I would say is that there are 5.7 billion people on the planet that are living under some form of autocracy right now. And what they got from the United States was a country that believed in freedom and was trying to push freedom. And just compare this to Ronald Reagan as an example. He's meeting Gorbachev in Moscow. The State Department says don't stop to meet the Jewish dissidents, but he stops to meet the Jewish dissidents to send this message. And so the message that's going on today, I think, is antithetical to what America has represented. Now, if you're telling me this is the direction that America wants to go in, and we're a democratic country, if that's the message, we want to go in that direction, that's fine. But I would represent the dissent of that. I would say that that's a bad direction for America. It's going to be bad karmically. It's going to be bad for our alliances. It's going to be bad economically.
And is it bad for investors? And I bring that up because we saw markets trade higher into this president's re-election. We have tariffs now. Anthony, I was on I did an interview with HP CEO Enrique Lores yesterday. He might have to raise prices because of tariffs on his computers. We have tariffs. We have the spectacle in the Oval Office. How could investors not fear this president?
Look, it's very bad. But look, the market's telling you that, Steve Cohen, a good friend of mine, I'm an investor of his, he said it last week. Remember, tariffs are a tax, and they're primarily a consumer tax. It's a consumption tax. It's sort of like a VAT, and that's a regressive tax. And so what ends up happening is the poor people, it eats up more of their disposable income than any other income group, and it's very harmful. It creates a negative flywheel, a vicious circle in the economy. So again, I understand that we need to manicure and surgically go through our trade agreements and reset some of them to protect American workers, and I'm all for that. But I don't think this sort of blanket approach is the right way to do it. And I think he's going to put us into a recession, frankly.
We've seen recession probabilities pick up. Our shows have been talking about it all day long. Are they right? Are economists right to worry that this president puts us into a mild recession?
Look, I mean, you got some room. The Fed could cut rates and create more liquidity in the market if we're really going to go into a recession. But it feels like that. He didn't need to do any of this. You know, the economy was doing quite well. He could have surgically applied some tariffs. He could have, if he didn't like certain things. Remember, he himself did the trade deal, redid the trade deal with China, redid the trade deal with Canada and Mexico. If he didn't like elements of it, he could have gone back to them and tried to tweak it. But going about it the way he's going about it, you know, he's got the Canadians talking to the Chinese now about selling their energy. You know, I don't know. I don't think that's in the best interest of the United States.
Lastly, of course, we're at the Bitcoin Investor Week conference. I've talked to folks in this room. People are optimistic about a Bitcoin reserve, stablecoin regulation. They think the administration is going to be friendly to crypto. But given everything else we're seeing, Anthony, does the crypto community, are they going to get a wake-up call that maybe the year goes by and none of these things happen?
Well, I mean, there's a chance of that, but I think even if the worst case happens, the one that you just described, the fact that there isn't a jihad against the crypto community, I think is very good long-term for crypto. This macro stuff, though, is not great for crypto. You know, just remember this with Donald Trump. You get the whole buffet table. You get the meme coin grift, you get the 51st state for Canada, the acquisition of Greenland, Zelensky's a dictator. And oh, by the way, while you're at the table with your tray, you can pick up a little bit of pro-crypto regulation. But he's going to force feed you everything on the Trump buffet table.
We're going to leave it there. Skybridge founder Anthony Scaramucci, always good to see you. Appreciate it.
Great to be here, man.
Thank you. Appreciate it. All right, guys, back to you in the New York City studio.
Saz, thank you. A little buffet table there. The Federal Reserve's preferred inflation gauge cooled as expected in January, but that bit of good news came with a dose of bad as consumers pulled back their spending by the most in nearly 4 years. Joining us now is Shelly Antoniewicz, Investment Company Institute Chief Economist. Shelly, thanks for being here. So we've been talking about today not just the PCE data and the spending data, but the fact that the Atlanta GDP nowcast, their sort of compendium of all the data, is now showing a potential pullback in first quarter GDP. Do you think that's just temporary, that once we get more data, we'll see slowing but still positive growth for the first quarter?
Well, Atlanta Fed GDP forecast right now, or nowcast right now for the first quarter is negative 1.5%. And it had been just a couple weeks ago, 2.3%. So the incoming data today from the Census Bureau on advanced international trade deficit showed a 25% increase in the international trade deficit. And that's coming from a surge in imports into the US. Now, is that trying to get ahead of the potential tariffs? Maybe. You know, we don't know the answer to that. Is it just a snafu in the supply chain from winter forecast, winter sort of issues? So, you know, but that is data that has come in, that is feeding into GDP. Now, in order to reverse that, we're going to need a lot more consumption growth. But yet the PCE forecast, the PCE data, on the other hand, that came out today showed a 0.2% decline in consumer spending in January. And we've seen that consumer confidence fell quite a bit in February. So the signs of the consumer, which has been holding up sort of the fabulous and wonderful GDP growth that we've experienced, the resiliency in the US economy, that could be starting to falter.
So, Shelly, based on the incoming data we're getting, including PCE this morning that you mentioned, what does that suggest to you about the Fed's possible next moves, both near and kind of intermediate term here?
Well, the Fed right now, if you look at the market, Fed funds futures, and what the probabilities of Fed cuts are saying, so what the market thinks the Fed is going to do is that there will definitely be a cut. There's almost near universal agreement that the Fed will drop the funds rate about 25 basis points in June. There is, again, near universal agreement that the Fed would follow on with another 25 basis point cut in September. And the odds are pretty high, about 70%, for a third cut in December. And that's different. That's different from just a few days ago where there was only 2 cuts built into 2025. Now the market is expecting 3 cuts. And the Fed could very well follow through on that. They've got, the direction of inflation according to their preferred measure, which is the core PCE measure, is coming down. As long as it continues to show sort of signs of slowing, that is going to be something that is, a check the box for them. The other side of it is you do have uncertainty in the labor market right now. One of the policy goals that has been stated is a significant reduction in the federal workforce. 10% target. A 10% target on 2 million people is 200,000 people. How quickly those people are absorbed into the sort of private, workforce and the disruption that could cause, that also could have an impact on GDP. And that's going to be something that the Federal Reserve will be watching carefully because they do have the dual mandate of employment and inflation.
And Shelly, we've been talking a lot about tariffs here on the show. A lot of the investors we speak to see them as a bargaining tactic, don't necessarily think that they will go into effect fully, or at least not for a long, some extended period of time. As an economist, how are you trying to model out what effect those tariffs could have?
Well, certainly I'm also of the opinion they're being used as a negotiating tactic, but if I were running a major corporation, I wouldn't want to go with that. I'd want to make sure that I was hedged against a possible increase or for the imposition of tariffs. Maybe not 25%, but 15%, 20, 10%. Even that is going to have an impact on my company's bottom line. So I would definitely want to make sure I'm hedged against that, where the exposures are, and what I can do in the near term to mitigate that.
Shelly, final question. We talked about tariffs. What about Doge, Shelly? Elon Musk certainly seems determined to cut. I'm curious how, as an economist, you try and think through the possible economic implications of that effort.
Well, as I said, if you think about it, the objective is to reduce the federal workforce. So how that's done, and it could be done in a way where people are slowly let go, or they have severance packages, they have time to find another job, they're not worried about making their rent or their mortgage next month, or their car payment or their credit card bills. So there are ways that this can be done that would have minimal disruption. Mass unexpected layoffs where people haven't really been able to financially prepare for that would have a much larger shock.
Shelly, thanks a lot for your perspective. Appreciate it. Let's get to some of today's trending tickers now, and we start with DoubleVerify. The ad tech company stock is plunging, and this is after it posted weaker than expected numbers for last quarter here, and the company also came out notably with the first quarter adjusted EBITDA forecast that was short of estimates. It said it didn't get the post-election ad sales rebound that it had hoped for, Josh.
Yeah, I'm just trying, it's interesting on a day like this, you kind of see what some of the analysts are had to say about it. What do bulls say in particular? Truist has a buy on this one. They were telling clients results, they say weaker than expected. Company, they say prudently tempering expectations for 2025. They argue short-term headwinds, yes, but positive long-term thesis remains intact. So
well, if you look at the stock over the long term, I noticed that last May, the company cut its forecast, and the stock fell nearly 40% in a single day. You see it very clearly on the chart there on the left side of the chart, and it just never really recovered from those levels. It just kind of went sideways from there. So it's now down about 65% over the past year, if you include the selling that you're seeing today.
Our next trending ticker, let's take a look at Archer Aviation. Those shares surging today after it disclosed that it intends to provide aircraft this year to a commercial customer, Abu Dhabi Aviation. That stock popping despite the company reporting disappointing numbers in its fourth quarter earnings. So Archer was interesting. So, interesting, maker of electric aircraft that sort of take off and land vertically, reports larger than expected adjusted loss per diluted share for Q4, loss per share of 44 cents. Estimated was loss per share of 28 cents. Needham has a buy on this one. Business momentum, they say, combined with a steeply discounted valuation versus their closest peer creates a margin of safety, they said.
Yeah, and this is, I believe, the only publicly traded pure play eVTOL company, if I'm not mistaken, electric vertical takeoff and landing. Is what these do. An electric helicopter, basically, that wants to be an air taxi eventually and provide that kind of a service. So, there's part of that this is the only way to play this kind of a thing. So even though you get these numbers, the bet is that with that Abu Dhabi contract and other stuff coming down the pike.
Yeah, and what a run for the stock.
Yes, most definitely. The stock is up a lot. All right. Our next trending ticker is fuboTV. That stock is down double digits today after it delivered mixed fourth quarter results and provided lower than expected first quarter revenue guidance. It also predicted its subscriber base will fall during the current quarter. Of course, we are awaiting the deal that it is doing here with Disney. Disney going to merge Hulu, Live TV, Fubo, putting it all together here. So this, it's unclear how important this quarter is compared to what people are
bigger
looking
picture, you're saying,
yes,
Julie.
Yes.
Our friend Michael Pachter at Wedbush, friend of the show, here's what Michael told his clients about this. He said, Fubo management appears content to slow the pace of subscriber growth as it focuses on profitability. To your point, he says, this suggests to us that management confident that its merger with Hulu Plus Live TV will close and it will be in a very strong financial position. That, according to Michael Pachter.
Well, he knows. In the Yahoo Finance podcast, Financial Freestyle host Ross Mack discussing wealth building journeys and what it takes to create a lasting financial footprint. You can scan the QR code below to stay up to date with all the latest with that podcast. And be sure to tune in to Financial Freestyle every Monday at noon Eastern. Here's a clip from the latest episode.
Let's talk about the growth of esports and what made you interested in this sector and obviously taking over as CEO of PlayVersus in 2023.
2023. So I've been the CEO for about 18 months.
Nice.
And we're really proud of what we've been able to accomplish. Our mission really is to provide, to make esports an officially sanctioned sport. Just like getting financial literacy approved in states, we're on a mission at PlayVersus to make sure that esports becomes an officially sanctioned sport in every state in our country. Right now, we're happy that in 27 of the 50, it is.
Wow.
Where a young person can earn a varsity letter, can compete for a state championship in an esports title. So it could be in Mario Kart, it could be in League of Legends, it could be in Rocket League, it could be in Madden. These are all exciting opportunities where kids who are on an esports team, they're again, earning a varsity letter, winning a state championship, hoisting the same trophy that a traditional sport like football or basketball are hoisting. So it is, we continue to try to get as many participants as possible. And one of the things that also inspired me at PlayVersus, which relates to my experience at EverFi, is I really saw when I started that in order for esports to grow and continue to be legitimized and be a sanctioned sport, we had to eliminate all barriers to participation. So one of the unique things about the EverFi business model is we gave our learning platform away for free to schools. We got organizations who cared about supporting things like financial literacy to essentially underwrite the cost of bringing that to the schools that they cared about. We've now done the same thing at PlayVersus. We've completely eliminated all competition fees from any school who wants to participate with us across the country. And we started a journey at the beginning of last year to assemble an ecosystem of partners who care about helping kids get involved in PlayVersus. And part of the reason they should care is that esports today gives kids, many kids, a purpose that they didn't have before they started to compete with us. Almost half of the students who play on one of our teams, this is the first extracurricular activity they've ever done.
Wow.
So you're literally pulling them and giving them purpose. I got a message just yesterday from a teacher. We just launched Marvel Rivals, which if you don't know, is one of the hottest video games amongst teenagers today.
Nice.
And she said, I can't thank you enough for introducing Marvel Rivals to our platform, because the 3 kids who just started the esports team used to sit by themselves at lunch.
Wow.
With not a lot of friends. And now they've got a new purpose.
Time now for our call of the day. Cava Group shares higher today after Piper Sandler raises the Mediterranean chain to overweight. So they are new fans, Julie. One of the best ways to invest in the growth of the fast casual restaurant industry. Cava, they say, best positioned companies are coverage to navigate any environment. Says they've raised prices less than some others in recent times. Cava, what a run, up about 65% over the past 12 months.
Yeah, remember, this is one that went public not that long ago. It went public back in 2023 at $22 a share, and now it's trading just shy of 95. So over the period of time, obviously it's done pretty well before a more recent little bit of a pullback here.
Right, I should mention that because you bring up the chart. They are up around 65 in the past 12 months. It is interesting, not a great 2025 so far. They're
no, it is not.
Down to like 20% this year.
Yes, they are. And although, the price target here, $115, and the stock is sort of mixed between buys and holds, 10 buys, 8 holds, no sells on the thing. So
Piper says buy it.
Yes, exactly. So going up a little bit today. And shares of Walgreens are lower today after Deutsche Bank downgraded that stock to a sell. Analyst George Hill writing that the deal with Sycamore is, quote, unlikely to be consummated at a premium to the current share price. So interesting here, there's been some renewed talk. The Financial Times most recently talking about Walgreens and Sycamore doing some kind of a deal, but it would be a take private, but it would have to sort of split up the company. And Hill is essentially saying it would be very difficult to value the different pieces of this company. He says it would be confusing to investors because some of the assets are in Europe, some are in the United States, and so that's one of the reasons that's behind the downgrade.
Here's the money line to me.
Yes, tell me.
I think it was this. We recognize that it will be controversial, he told clients, to downgrade a stake in the midst of a take-private discussion before a deal has been announced. But, he says, we have seen this scenario before in the healthcare space where deal reports have driven the share price to overshoot what a sponsor is willing to pay, and we believe this is the case with these shares.
Yeah, he says the sum of the parts is just hard to square.
Sell it, target goes to 9.
Yeah, exactly.
While we are wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action. Follow the closing bell. Stay tuned for Market Domination Overtime.